everyone to this installment of the Greenhouse webinar series with our special guest presenter, Rich Streithfeld, CPA. He is a partner at Social Enterprise Greenhouse, and we're delighted to have him lead this session on business basics for startups. A little background on Rich. He joined the ALS PCA firm in 1992 and became a partner there in 1998. He loves working with businesses, entrepreneurs, and artists. A graduate of Boston University, he directed an international nonprofit and is also a certified fraud examiner. Rich developed the state's first same-sex planning seminar and leads business workshops for clients. He's the author of the lively and irreverent dispatches from the Zen Mensch newsletter, and we're delighted to have him here today. So,
great.
Thank you, Rich.
I am thrilled to be here, and it's exciting to have more than a dozen people on the call. This is a really important topic. It's not a topic necessarily that accountants maybe are known for, but it's certainly something we get involved with. So I opted to do it because I found that there are just a lot of mistakes that upcoming businesses make, either because you're involved in other things, so you're not thinking about all these details, and there's just a lot of specific kind of bureaucratic things you have to go through, and some of the mistakes can kind of be long-lasting and hard to reverse. So there's a lot of nitty-gritty. Yes. So there's going to be a lot of nitty-gritty. There'll be time for some questions, but I'll try to do at least one slide or one chunk at a time, and then if people have questions, you can ask questions. Basically, my goal is to give you enough of an overview so you know what questions to ask, some details. If you're going to try to do it yourself, that's fine. There's always more work if you're doing it yourself, but at least you'll know where to start. And of course, since we're in Rhode Island, and most of this is going to be based on my experience in Rhode Island, generically, most of the steps are going to be quite similar in other states. Okay, so who am I? This is not a spiritual question. If you want to read my newsletter about being a Zen Mensch, we can talk about that later. So who am I means what kind of structure you are. So one of the fundamental dichotomies is that people have trouble with is when you set up a structure, a tax structure or a legal structure, you're setting up something that's different than yourself. You're setting something up that's legally different than yourself. But if you're the owner, it's also you. It's just you in a different form. So yeah, just keep that kind of paradox in mind, especially with taxes. There are structures where you're different, you're legally different, your structure is different, and then the bottom line is it's all the same. So it's kind of a little bit back and forth like that. So the first one here on the slide is, if you receive any kind of money in your business or in your enterprise, you're a sole proprietor, whether you've registered or set yourself up as such or not. There's no federal statute, there's no federal licensing required to be a sole proprietor. If you make money in your business, if you hang out a shingle or you don't hang out a shingle, you sell something, provide services, you do anything, you're considered a sole proprietor. Basically, that means it's just you, and you have income that you're earning, where you're in charge, you're not an employee. That's the simplest notion there is. So if you get what's called a 1099, if we're doing polls, I would ask how many people received a 1099. Most people don't want to receive a 1099, but if you're working, you're usually either an employee of a company or you're self-employed, or people also call it freelance or independent contractor. All those things is a sole proprietor. If you get a 1099, which is a form you should get, legally you should be receiving, if any company paid you more than $600, you should be getting a 1099. Say I'm a CPA and I'm not part of a firm, and I work for 3 or 4 different companies, and I say I make $2,000 each, they should be sending me a 1099 at the end of the year. That means I'm a sole proprietor. I didn't register, I didn't say I'm a sole proprietor, I'm a sole proprietor. That means, also sole means I am solely responsible for the taxes, the income and self-employment taxes generated by that business. That's the main thing about the sole proprietor. We'll get a little more detail about it. It's not a separate legal structure. Everything else on here is a separate legal structure. Okay? Corporation, LLC. LLC is limited liability company. We'll get into more details about that. There are different levels of LLCs, whether you're an individual or with somebody else. Then there's corporation, different than an LLC in the structure, but it does provide you some liability protection. Again, a separate structure, a little more structure. So these are all, at least when I'm talking about them, these are for-profit. You could also be a nonprofit, which would usually be a corporation. I'm not going to talk too much about that. That's a whole separate area, even though I know at SC Greenhouse there are a lot of nonprofits. It's a separate process, and the concerns are a little bit different. So it's a little bit outside the scope and time. Hybrid. Hybrid is, and again, we talked about these a lot at the Seed Summit. It's basically you might have a nonprofit that owns a for-profit, or that spins off a for-profit venture. There's a lot of that going on. Again, a little more complicated. Co-ops. I spelled that wrong in the initial draft of the newsletter, and they said you better change that because that's like a chicken coop. That's not co-op. This is co-op. So again, co-op is also has its own stuff going on. It's quite appropriate for some people, and there are a lot of co-ops. We've dealt with co-ops. But again, it's very specific, and it's a little bit overwhelming to throw in. So that's the overview. So in terms of the major differences here are sole proprietor, you're at risk legally. So let's say I'm an architect. Might be let's say I'm a graphic designer, and I'm a sole proprietor, and I get sued for slander or for breach of contract, or it can be anything. And they sue me. They sue the company. I'm saying company, even though I'm freelance, just hold that thought. So basically, they can go after my company's money, or they can go after my money. There's no distinction in those two. If I have Rich Streithfeld, graphic designer, and I have a bank account for that, and I have my own bank account, if they sue Rich Streithfeld, graphic designer, they can go after the other one. They can go after my house, they can go after my car. There's no legal separation. That's the one big drawback of being a sole proprietor. Therefore, it's the biggest advantage of being an LLC or a corporation, especially in the formative stages when you're starting a business. We will get into some of the tax structures and tax advantages or disadvantages. Some of them don't really matter very much until you're actually making money. If you're doing a startup, and a typical startup, most startups, especially if you're involved with social enterprise and you're not going public and raising lots of money, you're probably going to have a loss in the beginning, or you're going to have a small gain. So taxes may be important down the road, but they're not necessarily going to be important right away.
And Rich, speaking
yeah,
of social
sure.
enterprises that are just getting started, we had a question about your thoughts on fiscal sponsorship.
Okay. So fiscal sponsorship, that's good. Fiscal sponsorship, this goes in a little bit with nonprofit. So if you're going to become a nonprofit down here, there is a sometimes lengthy process. You can register at the state level to be a nonprofit. That doesn't get you very far. People want to be a nonprofit if they want what's called 501c3, which means people give money to your organization. It's therefore tax deductible on their taxes. That's a lengthier process for some nonprofits. So what's happened is while people are doing that process, they'll hook up with an existing nonprofit like Social Enterprise Greenhouse. The donations will go to Social Enterprise Greenhouse, which will then pay for some expenses of the nonprofit. So the person getting the money gets tax deduction, but the programs still get done. And meanwhile, the sponsoree is working on maybe getting their own independent nonprofit status. So Greenhouse is one organization that does it. There are other ones. Sometimes there's an administrative fee involved. Sometimes there's not. It all depends. But there's been a lot of call for that. So that's the essential difference between these three. Again, it's separate legal structure, no separate legal structure, easy and cheap, a little more expensive, but some more advantages in here, which we'll get to in the next. Oh, why don't you just click on? This is an advantage of an example of. Well, that's my head, but you can keep on going. This is an article you can find online on our company's website, alscpa.com, and it's just a little overview, hopefully with a little tongue-in-cheek about the different business structures. Okay. So we can go to the next slide. Partnership. Okay. So, go back. Okay. So, these guys are not business partners. Well, actually they are. So that's, of course, the Dalai Lama, and that's Desmond Tutu. That's more of a human partnership of, sometimes when I'm down, I like to look at them. Cheer me up a little bit. So ignore the next slide. Okay, so back to factors to consider. So, again, just try to keep in mind these different elements of legal liability and taxes. And then there are some other different elements. So the first one, do you have any partners? So for instance, will you see me if I go over there, by the way? If I go over to the blackboard?
Yeah, we can just...
Okay. Sometimes it's helpful. So... Okay. So the three ones we're talking about are, the main ones are LLC, corporation, and sole proprietor. Those are the, we're not going to talk too much about the nonprofits and the coops or the co-ops. So sole proprietor is one. That's one person. LLC can be one person, or it can be more than one person. One more little technicality is corporation. There are two main kinds of corporations. There's a C corporation, and there's an S corporation. Mostly in the startup world, we deal with S corporations. C corporations are mostly for public companies, which means you're going to be taking an equity. You're actually going to be hoping to sell shares and be on the stock exchange. That's wonderful. But it doesn't fit most of our clients. S corporation is called a flow-through entity. So this is important. What it means is that if I'm an S corporation, so I'm RSCPA, I'm an S corporation, I make a certain amount of money, hopefully I make money and I don't lose money, but either way, let's say I make money, do this tax return, but this entity, this S corporation, doesn't pay any taxes, doesn't pay any income taxes. All the income taxes go back to me, to my personal tax return. So you're doing this whole thing and this whole structure, and you're doing all this reporting, but the income gets reported here. Again, that's why it's called a flow-through entity. The taxes flow through from here to here. Same thing with an LLC. They're both what's called flow-through entities. Any questions about that? I know it's a little bit confusing. Some people never understand this. I have a client who I've been an S corp for at least 5 to 10 years, and he asks me, what are the taxes my corporation pays? And I said, the corporation does not pay taxes. You pay the taxes individually. It's like, oh, I didn't know that. Okay, that's fine. That's why we're here. So that's one big overall difference. Then, if you get into the specifics of these, so you decide, okay, I don't want to be a sole proprietor. I'm a little too risk averse. I want some legal protection. I'm going to be an LLC or a corporation. And if I'm going to be a corporation, I'm going to be an S corporation. So within that, then there are some other factors. One factor is foreign partners. If you're an LLC, you don't have restrictions. S corporation, there are some restrictions. S corporation, I think you cannot have any foreign partners. S corporation is limited, I think, to 100 shareholders. Now, most people with a startup are not going to have 100 members, but there might be some. There might be some where they envision doing more. You kind of want to set up a structure that's going to last for them. So that's one example. Then I mentioned, do you expect to take, I'm going to go back over there. So then there's some other questions. So we talked about what's your liability exposure. Again, if you don't have a lot of liability exposure, you might just go with sole proprietor to start. There are no startup fees with liability exposure. In terms of startup fees, LLC and corporation, it depends on the state. It depends on what state you're getting started in, but they're each going to cost something. Probably not a whole lot of difference between the two of them in your given state. How much money do you plan to take out in the first year? How well can you save for taxes? How much will the business be earning? What's the rest of your personal tax profile? That's important, again, because these are flow-through entities. So the major difference here between, again, we're talking about these two, the LLC and the S Corp. So if it's an S Corp, and it's rich CPA, then I'm required because I'm a corporation, I can take money out willy-nilly, but I'd have to do it through payroll. I have to do it as salary. So I'm an employee. I'm my own grandpa. I'm the employee and I'm the employer. Okay, that's as an S corp. So it's salary. So with salary, as most people know, you get to take withholding, or you don't. And what that means is you don't get all of it right away. Some of it is withheld for your taxes. Some people see that as an advantage. Some people see it as a disadvantage. Some people don't like that. They want to just take your money out willy-nilly. We'll just call it so. That would be our sole proprietor company. Willy-nilly. Willy-nilly. So he just takes money out willy-nilly. Let's say he makes $50,000 or $75,000. It's great. Hasn't paid any taxes until he gets to the next year, and then he owes a lot of taxes. Now, there are ways to pay taxes during the year as a sole proprietor, but some people who take money out willy-nilly also don't want to do that. So this can either be an advantage or a disadvantage. The advantage over here is you're kind of forced into some discipline to cover your taxes. So that's an advantage or a disadvantage of an S corp financially. Any questions about that? Okay. So then the next part of that is, let's say you're an LLC and you're willy-nilly, then you're taking money out the same way you would do as a sole proprietor. The only difference is, now this is as a one-person LLC, a one-person limited liability company. But the difference is here you have liability protection. So the S corp gives you the most structure in terms of taking money out. The LLC is a little bit easier. The sole proprietor is the cheapest, easiest, and I hate to say the word dangerous. It just has the least amount of protection. So each of these, again, we could have a full hour on each of these entities, and there are different factors in terms of exactly how much are you going to make. There are some benefits. There are some tax benefits with an S corp, which I won't go into today. It depends on how much you're going to be earning. It also depends on how much money you're going to be taking out. If you're not, for instance, if you're an LLC and you're not taking much money out, it may not be a big deal. You may not have much tax liability. So that's why I talked about the rest of your personal tax profile, because each of these, as I mentioned, are low entities. So you go from the corporation or the LLC, and then whether you made money or you lost money, that's going to show up on your personal tax return. Any questions on those? Doing okay on time? Foreign partners. We can have a quiz on at the end, but anybody, well, you can look it up. Okay. Okay, so here's some specifics on setting up a structure. Now again, as we said, if you're a sole proprietor, it's very easy. Like I said, you don't have to do anything. There is one thing you can do. So let's say I'm Rich Streithfeld, and I'm an accountant, and I want to use a certain name like tax refunds for all, or something generic. And I want to protect that name, not as a trademark, not necessarily legally, but I don't want other people to do it. So I will do something called doing business as. So be Rich Streithfeld, DBA, tax refunds for all. Now, in some states, you can do that registration statewide. In some states, like Rhode Island and Massachusetts, you have to do that in the town where the business is, which means it's only protected in that town. There are some towns, I'm not sure, there are some towns I've heard where they actually require you to register. Everybody's a little bit different. But anyway, it's usually a small fee. I think in Providence it's $10. You can't do it online. You have to do it in person or something like that. So it's fairly restricted. You can do it, but it's only going to cover that specific territory where you register. So you can do it. It just doesn't have a lot of oomph. Now, if you're an LLC or corporation, you can say, I'm Rich Streithfeld Incorporated, Rich Streithfeld LLC. I can file as a fictitious name statewide, usually through the Secretary of State. So that's one difference. Okay. So, but again, sole proprietor, nothing else to do. No other registration required. Now, so the names, and again, there's no specific name for a sole proprietor other than if you do a DBA. With a corporation or an LLC, you have to have a separate name. So usually what you do, and this is every state I've looked at is virtually the same. Usually it's the Secretary of State, and they all have, or most of them have what's called a corporate database, where you can look and see if the name you want is available. So there might be a conflict. So let's say somebody wants to open Rich's Cigar Shop Incorporated. Well, if there's another Rich, or there might be a Richie, then the Secretary of State, their job is to make sure that there's no conflict. So if there's a conflict, or if they perceive that there's a conflict, they won't let you register without getting permission from the existing business with that name. And sometimes the existing business will give it to you, and sometimes they won't. And sometimes it may not be a direct hit, but sometimes it's a judgment call. So you can usually get a sense. You can either call them sometimes, or you can email them, or you just register and take your chances, and then they might write back and say, we cannot accept your registration with this name unless you get permission from this other existing entity. So obviously that's for your protection too. When you're registering a name, you want it to be unique. So that's our job to figure that out. So that's the first step. So you do that. Again, most states you do it online. Rhode Island, if you're a corporation, it's about $230, I think. If you're an LLC, it's close to $150. These are one-time fees. Then once you've registered, then the next thing you need is what's called an EIN, or an OII. So EIN stands for Employer Identification Number, EIN. So It looks like it's social, it walks like a social. I think it might have the same number of digits as a social, but it's not a social. It's an employer identification number. So it's a unique number for your business. You absolutely need it if you're again, a corporation or an LLC. You have to have this number because that's the number you're going to file your tax return under. If you have employees, you're going to use that number. If you have vendors and they need that number, or you have people contributing, any number of things. You can be a sole proprietor and get this. Usually people will do it if they're going to have employees and they don't want to use their social security number, then they can get this. But it's not required. It is required for these. If you're going to open a bank account with a corporation, as a corporation or an LLC, you can't do it without this. The process for this is quite easy. This is federal. This is a federal number issued by the Internal Revenue Service. You can do it online. It's a pretty easy process, except for a couple of questions that are a little bit tricky where it asks about your structure. So you do have to be careful. It's something we do, other professionals do, because based on how you answer those questions, the IRS will determine what kind of tax return they're expecting to see from you. So sometimes I'll end up with clients and they will file, so think for instance they're a corporation and then we'll file a tax return and then the IRS will reject it because they said our records show that when you answer these questions, we told you that you should be filing this kind of form. So you want to straighten these things out before. These are the basic structures. So we can go to the next slide, which might be a visual. Oh, skip to the next one. There you go. Okay. So what's in a name? Ditcher, Quick and High, divorce lawyers, women, kickboxing kids. I don't know if you want that one. Soon Fat. So this is, yeah, good. Any questions on those, on the name setup? Okay, so the other big issue, again, the biggest issue that I find with startups and small businesses isn't necessarily, sometimes it's taxes, more often, especially in the beginning, it's figuring out the structure and being organized. If you're not organized, then you're not even going to know what tax consequences are. So being organized, you can start in small steps. There are a lot of different tools available. You don't have to be an accountant to be a small business, but you do have to track your income and your expense. Again, if you're a for-profit, that means the presumption is that you're in business to make money even if you're not making money right away. So if you're not tracking everything, then how are you going to know? And then things are going to happen and you're going to have a problem. So that's why I said, is this working? So there are 3 or 4 we'll go down to the bottom, 3 or 4 tools that I mentioned. So there's financial software. Now again, you don't have to use. I mentioned QuickBooks only because it's the most known. I'm not saying it's necessarily the best or the cheapest. There's another one called Wave. There's another one called FreshBooks. important things you want to know is you want to know how much money is coming in, both income, how much money is going out, and what's the tax consequences going to be? I would say those are the three basic things. And is your bank balance correct? Or is there stuff happening in your bank account that you're not aware of? I had a client who was a successful restaurant. He spent more money on bounce check fees than he did on bookkeeping services. So that kind of speaks for itself. If you're looking at that and you're seeing it, then you can take action and you can see what you need to tweak. Just like if you're a restaurant, you want to see what sells and what doesn't sell. Well, don't you want to also see what you're spending money on and what you're not spending on and what's making money? So I mentioned up there Excel. I think there's so much else out there besides Excel that's available. Excel theoretically should work, but in my experience, by the time people have worked with it and they get it to me, there's too much other stuff in there. It's just not organized. It doesn't lend itself to self-organization. You still need to do something with it, and you need to manipulate it. If you can do that, you might as well use these things, which are more set up for it.
What are the biggest differences between those three softwares?
These three?
You mentioned?
QuickBooks costs money. I think Wave costs money. I'm not sure. I don't know Wave as much. It's new to me. I think Wave might be only online. QuickBooks traditionally has a desktop version and now has a bigger online version that they're pushing. I think Wave might be only online. There's Wave and there's Zero. I'm not sure. One of them is free, but I'm not sure which one. FreshBooks is more limited in the financial reporting. There's QuickBooks for the Mac. It comes and goes in terms of its reliability. I think right now it's okay, but QuickBooks, like most programs, are definitely geared towards PCs. So sometimes people have problems with QuickBooks for the Mac. With the desktop, the online gets around some of those issues. So those are financial software. If you can't get yourself to do that, it's just totally beyond your being able to do it. Then of course you can hire somebody to do it. You know, one of the elements I think of being successful is figuring out what you're good at and what you're not good at, and maybe what you need to pay for. If you need to pay for a bookkeeper or a bookkeeping service, that's something to think about. But then there's another level of what is called tracking software. This is not financial software necessarily, but it keeps track of things. And so the biggest one of these is called Mint. Mint.com, which is a pretty amazing piece of software. You can use it personally or for your business. What it does is it pulls things from all your different, anything that's online that you give it access to, including bank account, credit card. If it's personal, it might be your mortgage. But let's say it's a business, so it wouldn't be that. But it might be your bank, it might be your credit card. And it pulls it in and it compiles it, and based on history and your input as to what different checks or deposit means, it will come up with different reports. Not quite the same as professional as the QuickBooks, but better than nothing. The other thing it lets you do is it lets you set goals, like saving goals, especially likely personal or business. It can send you reminders about paying bills. It's a pretty powerful program, and it's free, just free. Then there are a couple of others I listed there. One's called Shoebox. There are a lot of apps that they don't necessarily give you. This is actually going to give you some financial information. It's not going to give you financial statements, but it'll give you some sense of things. But there are some other applications like Shoebox that are for just compiling and summarizing receipts. Those people come into me and they've got a box full of receipts, or there are receipts all over the place. With these kind of apps, you can upload the receipts or you can scan them and it will save them. You don't have to have all this paper lying around. And then different ones have different ways of organizing things. There's another one called Slice, Shoebox, Slice. There are a bunch of different ones. So in this day and age, there's really no excuse for not being somewhat organized. The downside of being organized is if you're filing a tax return, if you haven't taken the time to be organized, then you're going to end up paying somebody to organize it for you. Can you just go back to one of the other? Okay, going back. Yeah, okay. So that's the alternative. Separation. So this ties in with organization, annual taxes. So again, you have to remember you're your own business, but you have a separate structure. Even if you're a sole proprietor, which is legally the same, you really want to treat it as something separate. You really want to have, with the sole proprietor, you don't have to have a separate bank account, but it's recommended. First of all, if you're paying groceries out of the same account that you're paying your web designer, if you're putting money from your parents in the same place that you're putting money from sales, you're never going to know how you're doing. You're going to know instinctively, but you really may not know scientifically. If you're a corporation or an LLC or any of these structures or a nonprofit, you have to have this separation. Otherwise, you're vulnerable because there's something called the corporate shield, and basically you're misusing this structure. It's supposed to be a business structure. There are ways you can reimburse yourself for expenses that the business paid, that you paid, that are business expenses. You can do reimbursements. You can pay yourself salary. You can give yourself loans. You can give yourself distributions. You can put your wife on payroll. You can put your grandmother on payroll. There are a lot of different. You can pay rent to yourself. There are a lot of different ways to get money out of the business. The one thing you don't want to do, you just don't want to mingle it. So just have them be separate. Some recommendations. And this is whether especially if you're on salary, as an S corporation would be, is have some sort of a budget, how much you're going to pay out every month or every period. This one I have to go over to the blackboard again. This one is probably the hardest concept. So let's say I'm an LLC, and let's say I've made $10,000 in sales in May. That's my sales. And I've taken $6,000 out and I've given it to myself, which I'm allowed to do. So I have now, bear with me so far, I have $4,000 in the bank account. So the generous view, which of course is the wrong view, is some people will say, I only made $4,000 last year. I'm only going to get taxed on $4,000. That's not true. It's not true because this is what's called a distribution. It's your own money. You're just taking money from the business and you're transferring it to yourself. So your income from the business was really $10,000. Because theoretically, if you're saying, I paid myself this, that's going to be an expense. So I should only tax on that. Well, okay. But then somewhere else, you have to have this $6,000 as income. So basically, it's a difference between an LLC and a corporation. If you're a corporation, then this would be the corporate income. But then you would have $6,000 on your W-2. With an LLC, there's no W-2, so there's no place to put that. So this doesn't really count. It's just switching pockets. Does that make any sense at all? Any questions? It all goes back to the tax implications. You have to know what structure you're using and what the tax implications are, and then hopefully guide your behavior that way. So that was the third one. Right. So yeah, so one other thing on that is if you're an LLC, you are not an employee of your LLC. You're just the owner. If you're a corporation, an S corporation, then you become an employee of your own corporation. So it's slightly different. Again, this one takes a little more structure. It keeps things a little cleaner. If you're going to do this, it's fine, but you have to be aware of the consequences. How are we doing on time?
We have about 10 minutes left.
Okay. Any questions on this? Separation anxiety. Okay, you can look this over at your own. Everybody will have copies of these slides, so I'm not going to spend more time with self-promotion. So let's go. Taxes. If you don't have income, you're not going to have to worry about taxes. Go on. Okay. So I'm not going to do the whole tax code in 10 minutes, but the basics to understand, and this can apply to any structure, really, is what, for businesses, what you can deduct is, for businesses, is what's considered reasonable and necessary to run your business. So it depends on your business. If you're an artist, you might have crayons, you might have canvases. If you're a lawyer, you're probably not going to have crayons. No matter what you are, you're probably going to have professional fees. Lawyers, website, accountants, supplies, rent, things like that. So there are kind of generic lists for certain professions, but that's the general rule. And even within professions, there's a lot of self-reporting. So what's professional development for me as an accountant or for my kind of accounting might not apply to somebody else. So there's a lot of gray area, which is why the tax code is so big, and probably also why there's a lot of tax cheating. When must I pay? So that really depends on your structure. Again, if you're a corporation, you're paying a lot as an employee. If you own your own business, if you're an LLC or sole proprietor, then the key word is estimated taxes. So remember, when I'm an employee, I get my paycheck every week. I'm paid $15 an hour, but I don't get $15 times 20 if I work 20 hours. I get $15 times 20 minus some of that tax withholding. If you're an LLC or a sole proprietor, you don't get a paycheck. So you're just taking money out, remember, willy-nilly. You're just taking money out willy-nilly with no taxes. That's great until you get to file your taxes and you see that you owe a lot of money. That's why it's recommended that you pay estimated taxes during the year. There are certain target dates. There's a way you can figure out the amount. But for now, just know that that's the concept, is you pay then. If not, then you pay it on April 15th. And then the problem is it's now April 15th, 2015, and you're paying taxes on 2014, right? So you're going to have the same problem next year. And then if you underpay, you end up with penalties and interest, and then you end up in a payment plan with the IRS, and then your business goes belly up, and etc. Does happen. I'm going to put to one of my newsletters if you want some irreverent tax questions. Can you volunteer? Can I volunteer time as a charitable expense? No. Writing off bad debts. Upgrading my wardrobe. I live alone and my 9 cats are my life. I feed them and they live in my shoe. Why can't I deduct them? If you want that answer, you'll have to look at that in your own time. That's quick on the basics. And then I think I have one more on funding. Again, this is its own thing, but it's very important, especially for social enterprises. If you're really passionate about your business, then I would do whatever you need to do to get it started. There are websites that help you if you have family and they want to give money, but you want have arm's length transactions. There are websites that can help you do that, have some separation. There are incubators like Seed that will help you. Sometimes they're very low cost or free that will help you learn things. Some of them have programs where they can be funded. There's also peer-to-peer lending. Again, these are different sites. These are a little more competitive, where different groups of investors will find fund projects that they want to fund. Grants, this is usually only available if you're a nonprofit. There's a lot more about that, but that's just wanted to touch on that. I'll just go back a second. But this is an important element when you're setting up, figuring out what structure you want, is to know where your money's coming from. If it's just coming from sales, then that's pretty clear. If you're doing any of these, then it might influence what structure you're going to use. For instance, if you're going to be raising private equity, for instance, somebody is actually going to be investing in your company and taking a share of it, which does happen in the startup world. Not so much in the social enterprise startup world, but it can happen. That might dictate a certain kind of structure. So I'd say that pretty much covers it. Again, if you're in your own time and you can't sleep, you can click on this video that was made about me to define what a Zen Mensch is. Any other questions?
Yeah, this has been a ton of great info, and I think there's so many considerations for someone, particularly someone just getting started, to think about. So kind of to sum up everything, are there a top 2 or 3 things that you recommend
2 or 3 things, right. I would say think through what your business, we didn't talk about business plan, because this wasn't about it, but think through what your plan is, have it kind of written out, and then look at where that fits with the different structures. How much money are you going to make? What are your financial needs? How does the business intersect with what your personal needs are? Because you're still a person and you have a business. So look at that and have that kind of dictate what structure you're going to use. That's the first. The second is figure out what you know and what you don't know, what you're comfortable doing. Are you comfortable doing your own books? That's fine. You need to hire somebody. Are you comfortable doing your own incorporation? Do you need to hire somebody? You know, what are the areas outside of your core business? What are the areas where you need help? And then just stay organized, whether it's an hour a week, you know, whether you have to do it for Lent or something like that, you know, or you need a reminder. Just have some minimum of organization. If you're putting your life and your passion into this, it deserves some tender, loving attention outside of the mission. Otherwise, the mission, as they say in Yiddish, the mission is going to be in Mishigas, and you're going to be overwhelmed with structure, which nobody wants to do if it's not your job. So,
great.
that's it.
Thank you.
Thank you.